Thank you. Thank you everybody for joining us today. Today we're going to talk about the tax benefits of electric vehicles. We'll predominantly look at the electric car, but I do want to touch on electric vans and electric bikes and motorbikes for you as well. Obviously, over the last certainly over the last 2 years, we've had more and more inquiries with regards to should you be investing in your next acquisition in an electric vehicle and what the tax implications are on that. So we thought it would be helpful to run the webinar because the government are offering lots of tax advantages, and it's becoming ever popular as we drive around to see more electric vehicles on the road. So let's talk about the tax benefits today. So if we are thinking of acquisitions going forward or leasing going forward, we know what those tax benefits and tax breaks for both the employee and the employer look like. So today I'm going to start by looking at what the employee needs to know. So when we talk about the employee, we're not only talking about your employees of your company, but we're actually talking about yourself as the director. So in different guises over the years, many people have probably had a company car. And, you know, going back to the year 2000, company cars were a nice tax break. They were a nice incentive. They were part of your employment package. Lots of people company cars. But it's become evident that the government have made running a company car so expensive for the employee that we very rarely were seeing company cars, and we couldn't make it tax beneficial for the owner director business. So we've all ran private cars and claimed mileage or whatever it happens to have been in the past. So when we think about this from an employee point of view, let's think about what tax we need to pay. We pay tax as a benefit in kind. And that benefit in kind, very simply, is calculated by looking at, firstly, the list price of the vehicle, but then applying a multiplier as a percentage of the list price of the company car. And that percentage has always been determined by CO2 emissions. So if you're in a £35,000 BMW, old school car, 160, 170 CO2 emissions, and then your benefit in kind when that multiplier works out will be in the region of £6,000 to £7,000 per year. And that is what you're taxed on. So then if you're taxed at 40%, the cost of running that car and to have it standing on your driveway has always been very excessive. But from April 2020, electric-only cars were subject to a multiplier of just 0%. And this has increased in the latter tax years. And also there has been incentives put in place for the electric hybrids as well. So on the following slide, what we have is we have a table that looks at those different percentages. So if we take the tax year that's just passed, the 2021 to 2022 tax year, and you've been running an electric car, if the car was registered after the 6th of April 2020, we take a £35,000 electric car, we multiply that by 1%, and that is the value of the benefit in kind. So working through that example for this current tax year, you buy an electric only vehicle, so it has 0 CO2 emissions with a £35,000 list price. We'll pay our benefit in kind based on a 2 percentage point multiplier. So that is just £700. So if you're running the car yourself and you're a higher rate taxpayer, that means that your tax liability will be £700 at 40%, so just £280 for the year. That's the whole cost to you personally of running an electric car through your company. Alternatively, if you're thinking outside the box and you want to supply that car or provide that car to a daughter, to a son, to a wife, and they're a basic rate taxpayer, you could potentially be running the electric car through the company with just a tax liability personally of the cost of running that car of just £140, because we would take that multiplier and tax would be paid at 20% instead. So you can see why the electric car has become very beneficial. The hybrid cars are also on the table, and the hybrid cars start to look at the different ranges that the car will cover. So what is its electric range? So you would use that table to see what the multiplier would be. So you would take a £35,000 car, and as an example, you would multiply that by 8% to calculate the value of your benefit in kind. This is for cars that are registered after the 6th of April 2020. Okay, so let's move on a step. Some of us drive vans instead of cars. So if we drive an electric van from April 2021, a zero emissions van, so a pure electric van, is taxed at 0%. And as such, you can run an electric van through your limited company, use it in the business as much as you want, use it as your hobby as much as you want, and there will be no personal tax charge for this. So as an example, if you go rock climbing at the weekend and you quite fancy throwing all your kit in the back of an electric van, you can run that van through the limited company right now with no personal tax charge. There is a scheme in Nottingham at the moment whereby you can have an electric van for a 3-month period at no cost, and there's an encouragement to get courier firms, as an example, to use those electric vans on a trial and see how they get on. So there are details available for that to follow as well. The other electric vehicle that we need to consider is an electric bike. We always have to think about whether an electric bike is an electric bike or an electric motorbike. The rules are different for the two different scenarios. So we do need to always consider, based on the motor powered top speed and bits and pieces like that, as to whether it's a bike or a motorbike. Electric bicycles do qualify for the traditional cycle to work scheme, so they can be provided to you as a director or to any of your employees if you're encouraging them to use bicycles without any personal tax charge arising. Motorbikes have yet to be considered by HMRC. I'm not sure if there's a huge availability of electric motorbikes, so that hasn't been something that's been considered by HMRC at present. So that starts to give a good overview as to what the cost is to the employee with regards to running an electric vehicle. So let's turn the tables and think about what the costs are, or what the benefits are to the employer of the employee being provided with an electric vehicle. So when we have an asset within the business, if we were to purchase an electric car, then the business reduces its profits by something called capital allowances. So from the 1st of April 2021, any electric car is subject to 100% first year allowances. And what that quite simply means is if I go and buy my £35,000 electric car, used in my previous example, the company's the company's profits subject to corporation tax will reduce by £35,000. So I purchased my £35,000 car through the limited company, and the company saves corporation tax at 19% in this current tax year on that acquisition price. So that's a saving of corporation tax of £6,650 and makes that vehicle sound a lot more, a lot cheaper. So it's good value, isn't it? And not forgetting that corporation tax rates increase to 25% from April 2023, then that actually takes that corporation tax saving for the more profitable company up to £8,750. So you can see that the employer can really start to use the issue of electric vehicles as good corporation tax planning, especially if you are looking to make the acquisition. That's all very positive, isn't it, for the employer? So we can save £6,650 worth of corporation tax and simply pay £280 to be given that car by the company. So what else does the employer need to consider? We might not be able to afford to purchase a £35,000 car, so we may look to lease the car, or we may have a few more questions in terms of the future value of the leased car. And as such, in terms of the lease of the vehicle, then a lot of people that we're speaking to at the moment are getting offered good deals in terms of lease rates. So when we're talking leases here, we're simply looking at a lease that I call renting a car. Basically, you use it each month, you pay a fee for it, and at the end of it, at the end of the lease, however long that is, you give back the company car. So what does that look like from an employer's point of view? Well, as long as the emissions of that vehicle are less than 50 grams per kilometre, then the payments that you make on a monthly basis are tax deductible, and they're tax deductible in full. So again, this could be a vehicle that you don't use within the company particularly at all. You might only do a couple of business miles. But the cost of running that car is a fully tax deductible expense on a monthly basis in the calculation of your profits for corporation tax. And of course, at 50 grams per kilometre as well, that can include some of the hybrid cars as well in this category. If the emissions are greater than 50 kg, so you're looking at hybrid, and it's a little older maybe and doesn't have such good emissions, then there's only 15% blocked. So you still get the corporation tax relief on 85%. So the lease route is something that we're hearing quite a lot taking place from an employer's point of view. In terms of VAT, I want to cover off VAT from an employer's point of view as well. Current law says electric vehicles are cars for VAT purposes, which means that VAT is not recoverable on the purchase. However, VAT can be reclaimed if the car is used 100% for business purposes. So if you are looking to have a pool vehicle that is a genuine pool vehicle within the company, and you want to run that as an electric vehicle, then you would be able to cover the VAT. We would need to talk about it in a little bit more detail. There are a number of stipulated criteria that you would have to match. So you can't park it on your driveway and say it's a pool vehicle. There is, wider criteria that we need to match for that. So that's looking at the VAT side of things. We also need to consider the VAT from a leased car point of view, because when you go to the dealership, the VAT will be added to the lease. So say it's £500 a month, and there will be a 20% VAT charge on there. If the leased vehicle is used privately in any way, shape or form, so it is your main family car, you do with it what you want to, then the rules are very strict. 50% of the VAT on the lease charge can be recovered. And that is just old school lease criteria from HMRC. We can't flex that and say, oh, I use the car 80% for business, I can reclaim the 80%. That is not the case. It is always 50%. If you do take out a maintenance charge with your lease, so if you pay a monthly amount for ongoing maintenance of the lease vehicle, then VAT is fully recoverable on that. And vans and motorbikes are not cars, so input VAT is claimable. So if you go and buy your £35,000 van with VAT on it at 20%, then just as with any other van, the full VAT is reclaimable by the business. So what else is a cost to you or the business when you take on an electric car? Well, we need to consider how we're going to charge it, don't we? So electric charge points and the charging costs thereof. Where the business installs new and unused charging points for an electric vehicle up until the 31st of March next year, it can claim 100% of these costs within the business. And that can be on an employee's premises as well. There is no taxable benefit for the provision of electricity. So if you do have an office and you are providing a charging point and your employees are using that, or you yourself is using that to charge your vehicle rather than using your electricity at home, then there is no taxable benefit personally on the provision of that electricity. If you drive the vehicle for business purposes, then we can claim 45 pence per mile for the first 10,000 miles driven in the year, with additional 25 pence per mile where the electric vehicle is privately owned. So if you do have an employee who's running an electric car, then it is 45 pence per mile for them. Where the car is provided by the employer and you're using the electricity at home to do those charges, then we can claim 4 pence per mile from the company. And those are set at the moment. We have had the question a few times with the rise in energy prices and the rise in fuel prices at the moment, if we see the fixed car profit scheme amount or that 4 pence from an electricity point of view, or the use of home allowance for that matter to increase. And we haven't so far had any sort of nod from HMRC that there are going to be any changes. And finally, I just wanted to cover off before we move to any questions, what happens if you're self-employed and driving or purchasing an electric car. So we can be a sole trader, we don't have to be running a limited company. So where we're a self-employed and purchasing an electric car, those capital allowances that we talked about for the limited company are available for the self-employed individual as well, but they are restricted for personal use because there's no benefit in kind payable, because we're not an employee of a company, we are a sole trader. Then the example would be that we take the £30,000 car. We would be able to claim 100% capital allowances on it, but we restrict that for the amount of business use. So if the business use during the year is 75%, then the tax deductible amount in the calculations of profits for tax purposes would be restricted to £22,500 for the year, so 75% of the 30k. So still very beneficial for the self-employed to be purchasing a car. And again, with the lease, then if it's solely for business purposes, then the deduction would be 100% in the calculation of profits for taxation, or we take the lease amount and we would restrict it for the amount of personal use that that car has. So that would be a case of keeping the mileage log, as anybody running a car as a self-employed person would be doing anyway. So I appreciate that's lots of information given today. We will take questions, and thank you very much for listening to me talk about electric vehicles.